If you set up a 1 to 10 and collect partials at a 1 to 3, you trade it a 1 to 3. If you let that partial run a little bit, then you trade it a 1 to 4. Smart money works this way, you guys. Trust the process. Hello you guys, welcome back to my channel. In today's video, I'm going to show you how to find an amazing Wyckoff schematic. So this one is an accumulation that I just caught, and I'm super excited to show you this trade, especially this TP right here. Oh my god, it was crazy. And I also want to show you why I don't go break even. If you're interested in seeing how I caught this 1 to 15 trade on a 2.4 stop loss, then keep watching. So I did replay it to the time where I actually found the trade. I know a lot of guys on YouTube want to see live trading, but this setup took about, let's say from, it was actually morning, so I was not 5:30 in the morning, or was it the night before? So I know a lot of you guys want to see live setups, but you're gonna have to join the academy for that, where I post literally as I go, and I'm not recording everything. And remember, when we're trading Wyckoff schematics, we don't just get up and go on the computer and find what we want. We have to wait for price to come to our point of interest. That's why you guys can't find trade. You're not waiting for price to come to the right place. You're getting on when you're done work, when you feel like it, and thinking the market's presenting something. I need you guys to understand that's not how the literal economics of the world work based off this website, that's tradingview.com. I want you guys to understand this works right now. This is what I currently have. I don't use FXCM, I use Awanda, but on all my Awanda watch list, I literally have the same setup: structure, point of interest, alert. I have higher time frame down structure. If you guys want more detail and structure, I did do that on another video using the same pair, but that's a different video. So this is clear down structure on like 30-minute, 1 hour-ish. You don't need to do daily 4-hour top down. There's no point. We're not trading from last month. And the current minor structure is right here. We have a down structure buying to this manipulation point of interest with unhealthy price action. Should make sense. Something small like this is not unhealthy price action. Yes, it's an imbalance, quote unquote, but it's not an unhealthy, manipulative, institutional imbalance. So you guys need to know that not every gap is an institutional gap. Not every order block is an institutional order block. So as you see, we're buying up into this point of interest. So that makes logical sense, right? So we're just looking for an area of 50% retracement. So on the 1 minute, there is a gap here. You guys, again, it's an imbalance. So I set my alert and wait for price to fall into this gap. So let's watch as that happens. Oh, actually, sorry, let's get low. So it is a 1 minute. As you can see, it's a 1 minute gap. So we are working on the 1 to 2 minutes, which is very low, and I don't recommend for beginners, but I did find it. So let's wait for price to walk into the point of interest. Okay, so I'm going to get a notification because I'm going to have an alert. I can't show you fake alert in replay mode. Now, this is the key. Take notes, you guys. This is free training. From the point of interest going upward, mark up your structure within that range. Okay, so we'll just do all of it for the sake of the video. Well, we only need 4, so we don't need to do the top half. So this is the structure you're working with. This is down structure into the point of interest, and your break of structure is going to be here. So again, this is where I'm putting my alert, the next step. So real time, okay, my alert goes off, mark up the structure. Where do I need to break? Here, put my alert, walk away. This is why we don't just get on the chart to look for schematics, because it takes time to build in the right place. So my alert goes off. And now I'm like, okay, let me see if this is a break of structure within a Wyckoff schematic. So I'm just going to clear a little bit. However, this should be my UA, because in a schematic, a UA is what breaks the structure. So I'm going to use this data. I'm going to clear this just for distraction purposes. And notice how we break with such strength, whereas this took so much time to print. So that's how we can already kind of predict that that's a sign of strength. Okay, so if this is a UA and we're building the puzzle backwards, you guys make sure you get the Smart Money Playbook. If not, use the free Wyckoff resource. This is a UA, then this would have to be your third drive down. So whenever we can see we have 3 drives down. Now we need to look for the 3 drives up. So remember, we actually had a structure point here. Okay, so this would have to be a drive down, but then this would have to be a selling climax AR. So then that means this can't be the UA. So mind you, this is our first structural point. Okay, well, that's not going to make sense because selling, let's say here, selling climax AR, ST, then UT. Because the UT can't be lower than the AR. So that doesn't make sense. But we do have these 3 drives down. Okay, cool. Again, I'm showing you guys legit my thought process. I started here and then I had to move on. Okay, so now this can also be the breaker structure because we broke this high as well. So the market's going to tell you you're not always right off your first attempt, right? It's just a blueprint and you have to learn how to move along. Now if we do selling climax AR, ST, let's say ST, UT, ST is a sell, test, and spring. That's 3 drives down with 3 drives up. Now that makes sense. So let's mark that up on the 1 minute. There we go. So you also want to make sure you label all your tests because you don't want to be skipping over pieces just because you feel like it, you guys. Again, it's not about how you feel, it's about what the information is presenting. Okay, so now that we have that, let me mark up our sign of strength, which would be our SOS. We're going to start looking for an entry because we clearly broke structure. Everything makes sense, but we also need to put a trading range on the schematic to make sure that it makes sense. So we're going to start with body. You can do body or wick, and it's whatever one that makes sense. So let's see which one makes sense. Well, this is already mitigated as an entry, so like that's obviously not the entry. We don't need the top one. Now let's look at the bottom one because I'm starting to see an order block. Let's check out the wick. So 50% is going to be for the entry. Now it's not showing 50% at the wick. It's not showing 50% at the body. Let's go up to the 2 minute. Okay, so on the 2 minute, we have this imbalance. It's not exactly with the body. This is FXCM, you guys. They use a Wanda, so I'm pretty sure it was actually trading range alignment on a Wanda. Well, it actually was. So let me just try to see what it would look like here without that. So on this broker, we wouldn't get trading range alignment. Depending the 50, so you want to use the higher wick, but it's showing on this wick. So some of the data prints differently. So let's just do as is because it's not going to make a difference. Okay, so imbalance order block. The order block is going to be marked at 50%. I'll show you the trading range alignment on my other one. Okay, and we're going to be need to mark up the standard, and we're going to set our position. So we're going to start at the imbalance because we want to hit the imbalance, the trading range alignment, and the order block and not get stopped up. Stop loss below the bodies. Okay, so we're going to take it here at a 2.5 because the body is a little bit too small. So if you do a 1.7, you can get the risk to reward. If you do 1.7, the risk to reward can kind of make sense here, or like a 1.4, but obviously that's not realistic. So this is your nearest equal highs. Again, we're at a 6. So I'm going to take it up to the 15 so you guys can see. So I am redoing this, but again, a different broker and these tight ass numbers, it's really hard. So I'm actually what I actually did is that I took it to here. Normally you never go through candles and go left, but because this manipulation is so big, we don't have a choice. So because I know this goes up, I'm gonna just expand it for you guys, and let's watch it play out. So it goes right to the order block, right? Which it did in my other scenario, but I did have trading range alignment. And then it just goes to take profit. This is why I don't go break even. Guys, the market will test you. Smart money, you have to trust. We can't be collecting, partials every 2 seconds because we're so used to 1 to 10s and 1 to 3s. If you set up a 1 to 10 and collect partials at a 1 to 3, you trade it a 1 to 3. If you let that partial run a little bit, then you trade it a 1 to 4. Smart money works this way, you guys. Trust the process. You guys see it went up to here. I collected partials around here. First, I only collect partial. I collect 90% of my trade at 90% of the risk reward, so it's more like a 1 to 8.5. And then I collected majority of it here, and all this I let run till here. And then right now I have a floater that's collecting change. So that's how I traded the schematic. So let me show you on, oh, it's not on the watch list. Once I trade NZDCAD, once I trade the pair, I just take it off because I'm not going to trade another schematic. So schematics do not happen back to back, you guys. This is not retail. So as you guys see here, actually, sorry, it was the AR. So you guys can see I actually did it a little bit different this time. I did selling climax AR. So the selling climax had the trading range alignment. But in this example, you see how the selling climax doesn't even reach the lowest point of interest. So different brokers kind of show different results. I use a one to always have. I don't know why. That's how I was taught it was the best one. I just use it. But at the same time, you also have to check your MT4 numbers. I explain MT4 numbers in my course called the Risk Management Workshop, where it's like, not only is a Wanda not your broker, FXTM is not your broker, that's a TradingView broker. Your broker that you're actually using, especially for funded accounts, can be different. So when I went and set this limit, I actually had to check the exact numbers of this gap on my MetaTrader, which could be different than this exact number over here. So this is 91.2, but on my broker it could be 90.1. So that 1.5 pips can get you in or not in the trade. So make sure you pay attention to that. Thank you guys so much for watching. Don't forget to comment, like, and subscribe, and I'll see you guys in the next one.